really what it comes down to is like play your own game. Charlie Munger said it best. There's always going to be somebody who's richer than you. There's always going to be somebody who's doing better than you. And sitting there kind of comparing yourself to that is just going to set unrealistic standards. And what really matters is the progress you're making in your own life. So if you're going from, point A to point B and you see somebody else going from point, E to Z, it's like, that's them. Like, focus on you because like sitting there watching them is not going to help you make progress to the next level. Do your best to just, compare yourself to where you were last year. Like sit here and think about like, hey, where was I at December 2024? Where am I at now? And what can I do between now and December 2026 to continue to make progress on my own journey? Because for you, your journey is the only one that matters. Nobody's going to care more about your situation and your journey than you will, than you can. And so do yourself a favor and focus on the only game that matters, which is comparing yourself to where you were last year and focusing on what you can control now to get yourself ahead next year. Market Hustle community, welcome to episode 64. I hope you all are having a great holiday season with the people that you love most. For those of you who are new, my name is Josh. I'm the guy behind the Market Hustle. And for those of you who are returning, welcome back to another great episode. Now, this episode specifically, this one's going to be a special one because it's our last episode of 2025, and we've got the entire podcast team here today. It's been a little bit since we've had a full-on kind of roundtable discussion, and we've made quite a bit of progress with the podcast this year. We've done over 30 episodes, so at least over 30 hours of podcast information out there for you all. And most importantly, we made it all through this entire year. We got through it. I'm sure it's been a crazy year for everybody in some way or another. But if you've been riding with us since the earlier episodes, we really appreciate not only the support, but hopefully you've been able to take away some good insights and information to keep your financial journey running smoothly. So today, with this episode, we're going to be sharing some of the biggest financial lessons that we all kind of took away from 2025. We're also going to talk over how we handled some of the choppy moments in the market, especially back in April, the tariff sell-off, and maybe some of the money beliefs that we've kind of changed this year as we've kind of all grown as investors and just through life in general. So that being said, let's go ahead, check in with our lovely co-host. We've got them all here today. Let's start with Baafi. Baafi, how are things going in New Jersey as we wrap up the year?
Man, it's been a good year. I've been spending some time reflecting on the year. First half of December was super busy with work, final deliverables, competing priorities. Then, I took off the last 2 weeks of the month, so I'm not working until January 5th. So I'm just spending some time, quality time with family, friends, getting ready for the holidays, and I'm also moving into the house. So we've been kind of moving stuff little by little over the last like month and a half. Thinking about a week, we should be finally settled in right before Christmas to just kind of, usher in that new chapter. So things are good. I don't have much complaints over here.
Well, hey, big congrats on the progress with the house. And glad things are, they're still busy with work, but glad they're, kind of calming down towards the end of the year.
Thank you. Thank you.
Of course. Let's jump over to Pierce in Southern California. How are things going over there, my friend?
Still sunny, thankfully. I mean, it's, for us, I don't know, cold is, I don't know, I think the night gets down to like 47 degrees. But other than that, man, life's been super good. It's been an eventful couple of months, just working and, getting my mind right and learning more about the markets and just enjoying life as it is.
Yeah, definitely excited to get some of your insights of what you took away. I know you've been making some different moves recently with
Definitely.
the stock market, so we'll have to dive into that. But good to have you back, man. Fernando, you are in Florida. If you're watching this on YouTube, or if you're not watching this on YouTube, he currently has this nice penthouse background.
It's actually New York, which it's like my second home that I go to. Yeah, it's been a good amount of time, honestly. What's been happening? I actually went up for a winter trip to Canada, and that was super
Nice.
fun. And I recommend anybody that wants to do like an official winter getaway, go to Canada, right? Because it's like true snow, and you get to do all the activities, and you don't really have to wait till like the season comes in. But that was a lot of fun. And then also financially, I think just mainly this month has been rebalancing, tax harvesting, and just trying to see what next year brings and preparing for it before the holidays.
Nice. That's awesome. Yeah, I feel like Canada, you get that full winter
Yeah.
experience, given that
Yeah,
they're
it's cold, man. It's
yeah.
extremely cold. For Floridian, that's like me going putting my
That's
head
the
inside the
opposite.
freezer.
Yeah.
Yeah, like it's super cold.
No, it's awesome, man. Well, good to have you back. Also excited. Maybe you can share some of the tax harvesting stuff when we dig into the questions, because I'm sure that's on a lot of people's mind.
Yes.
For context, everybody listening to this episode will be out probably the day after Christmas, but we're recording this about a week before Christmas, so we're still, this maybe if you guys hear us talking about Christmas or the holidays in general, just keep that in mind. There's a little bit of a delay. But cool. Let's waste no time. Let's jump into the 2025 recap and some of our key lessons that we all kind of learned and share with the audience, maybe so that they can skip some of the maybe mistakes we made or just help get them a little bit of ahead uh, to let them take advantage of some of the learnings we've had. So let's start with this. Let's start with this question. What's one of the big financial lessons that you would say kind of defined 2025 for you? Like, what was your big financial takeaway for 2025? Baafi, I don't know. I feel like you're great at like starting us off, like kicking us off with these questions.
Man, let's dive into it, man. I would say the biggest one, and I think if anybody's been in the market throughout this year, to me, the most important lesson that I learned, which kind of seems to be a theme, but is simply nobody knows shit. Nobody knows anything. Okay, so you might be a newer investor or a seasoned investor, or you think you might watch CNBC, you might hear, the CEO speak, you might hear this financial firm, you might hear this and what. Nobody knows anything because at the start of every single year, every major corporation in terms of the financial firms, right? Whether it's JP Morgan, Goldman Sachs, Bank of America, you name it, they all have the prediction of what the stock market is going to do for the year. Okay. And I can promise you, none of them got it right. Over the last like 5 to 10 years, none of them have, like, they can say, okay, for example, 2026, the stock market is going to reach $8,000 or $8,000 for the S&P 500, right? It doesn't mean that they know what they're talking about or that they're accurate or that they're right. So you have to understand that there's a lot of volatility. Nobody knows anything. The only thing that we know for sure is you need to just consistently keep investing. Simple as that. Yeah, so that's it.
I
That's
love that.
short and sweet, man. Yeah, nobody knows anything. So not even the people on Wall Street, they don't know a damn thing neither. They react and make decisions based on whatever is happening live, right? And think about it. Most of the trading is not even done on Wall Street like it used to be done in person, and they call it out numbers. This is all high frequency trading. Technology is rampant in it, and everybody's trying to get that extra edge of like a hundred millionth of a second to get the edge on the next person. So nobody knows anything. Just invest for the long term.
Well
Yeah,
said.
yeah.
And
I'll
uh,
segue. Go ahead.
I was just gonna say I wanted to throw in something with the prediction side of things. Predictions are exactly that. They're predictions, right? So I think it's easy as a new investor to get caught up and like, oh, this credible person, maybe they're a financial professional or whatever, like they're saying that it's gonna be X, $1,000 by the end of the year. It's like anybody could say that, right? Like I can sit here and make predictions, and we can all sit here and make predictions. Sometimes they come right, but just take them with a grain of salt. Even Robert Kiyosaki, he has a lot of good financial education books. He made a prediction. I remember it was like he thought Bitcoin would be around $300,000 by the end of 2025. And we've actually seen kind of the opposite happen where, Bitcoin's kind of had a bit of a pullback in 2025. That doesn't mean it won't come back in 2026, but it's just to show that nobody really knows for sure what's going to happen in the short term, which is why you want to, at least when you're starting, like take the approach of building a portfolio of quality assets before you start throwing gambles or risking stuff and hoping something pays off. But go ahead, Fernando. I know you want to make a comment.
No, I was gonna segue to what Buffy said. I think that, it's true, right? Like this year I really learned that we don't know the direction we're going. I think we have to, like you said, compute is kind of running quicker than human physical trading ways of like 10 years ago, where things were done in Wall Street. I think now computers are doing it all, and to keep up with computers, it's kind of impossible. But what I think about that is like you have to find just quicker inlets into information. You have to kind of leverage AI in a way to your favor, for you to be able to access this information. And even so, you're not going to be able to get enough to make the right decision because the market this year, man, it's been volatile all year, and that's my take on that, right? Like I think this year for a day trader, I mean, some day traders are benefiting, but it's been a new lesson to learn, right? It's been just different to trade.
And for context for everybody listening, Fernando is more of our active investor here on the podcast. We like to bring out a rounded perspective when we, talk over different financial discussions. So I really appreciate you adding that insight, Fernando. Pierce, what about you, my friend? Like, what would you say is one of your big financial lessons for 2025?
Just kind of just staying consistent, it's the compounding effects works in every single way in your life, right? And so for me, it's been just staying consistent with what I do. I mean, just simple dollar cost averaging into funds and stuff like that, whenever you get paid, I just do that. And I mean, this year's been, I think, pretty good for almost everybody, unless you're in some really, really volatile things. But just kind of staying consistent and just staying disciplined with what my true core values are and what my intention is with investing. Other people have different intentions, but my intention is to, conserve wealth and preserve it and grow it. But that's pretty much mine.
Can't go wrong with that. Sometimes nailing down just the consistency of whatever your strategy is the name of the game, right? Like that tends to be where we see the biggest returns. I'd say, for myself, I think for 2025 specifically, I really saw the power of delaying gratification and how some of the earlier decisions I made, especially in my early 20s, opened up the opportunity to enjoy life more fully. For example, I was able to travel internationally to Japan twice in 2025, which is something that I would only have been able to dream of. My younger self, like I don't even think he would have thought that was possible. So really just kind of seeing the early effort that I took when I was in my 20s, like 20, 21, 22, and how the people around me thought I was crazy. They would question what I was doing, and sometimes that would lead me to questioning myself, like, am I doing the right thing? Like, is it smart to invest for the long term? But now I know the answer is wholeheartedly yes, because now that I just turned 30 last week, I'm starting to see the options just open up to me. It's like I have more opportunities available, whether in the business I built or whether in the options of what I want to do. Like if I want to go travel somewhere, if I want to go visit family, like whatever it is, it's like I'm starting to see the delayed gratification, the benefit of delayed gratification from those early stages. So if you're listening and you're kind of, in year one or year two of your financial journey and you start to question like, is it worth it? Setting up this budget and just, investing consistently and implementing these good financial habits? The answer is yes. It just takes time to see it. And most of the time, I think sometimes people assume that they're not going to see any payoff until they're, old and they're in their 60s or 70s. It's like if you're starting this journey in your 20s or even your 30s, a lot can change in even 5 years. So yeah, maybe you're not going to be able to retire fully, but you'll be able to do more in your life than you would be able to if you never started this journey at all. So just kind of keep that in mind.
Josh, I think that's a really powerful point, man, because sometimes people do logically understand and appreciate that delayed gratification piece, right? But it's like they're also like, well, if I gotta wait 5 to 10 years to travel, what if I die in year two? You know what I mean? They start kind of that uncertainty or like the fact that you can't predict exactly what's gonna happen in the future. That's something that a lot of people wrestle with, especially at a time where the moment you go on social media, you look at a reel, you look at TikTok, everybody's telling you about their travel blog or vlog or their travel story. So it's easy to feel like you're missing out on something. But you have to keep in mind, there's a reason why not everybody gets the opportunity or everybody builds wealth and still have the balance. To Josh's point, you know, investing for the long term allows you to actually travel, believe it or not. It allows you to travel faster, but it allows you to travel more over time versus somebody might be in their early 20s and just prioritize traveling, but then from let's say age 26 going on, life gets serious and then they might be in a really tough spot. They can't travel freely or feel comfortable traveling. Or if they did travel, they know that they're going to be struggling for another 8 months just to pay that off. And so they're wrestling with that guilt. And so I think it's really, really cool that that's a highlight for you, Josh, this year, and being able to see the world at a time where you recognize that you've been investing for quite some time. You've had the budget, right? You've lived on what you make, below what you make, and so now you can see the fruits of that labor and enjoy it without coming back and feeling like you're financially strapped and have to worry about certain pieces. I think that's a really powerful message. I hope more people kind of really take heed to that and really emphasize that and implement it in their own life because it's worth it. I have a similar story too. Same thing. First, like 6, 7 years of investing, barely traveled. The last 3 to 4 years, dude, I've been to like 19 countries. Crazy, you know. And the best part is, I come back, the money's still growing.
Yeah. You're not coming home to debts. That's the huge highlight. And even if you're in your, I know we have people in their 40s or even their 50s that listen to this episode. Of course, we're younger, but at the same time, it's like I want to highlight that a lot can still change in 5 to 10 years. Like, of course, it's easy to say like, oh, I wish I would have started, much earlier, or like maybe you think, oh, these guys are in their 20s and 30s, like, they've benefited from being young, so like that's something I can't do. It's like, no, like we've had plenty of guests on this podcast who are in their 40s and 50s who have made significant changes in their life in just 5 years or so. And I just want you to know that it's possible. And a lot can change if you're just willing to kind of put your head down and delay gratification. That's really what it is.
I talked a little bit about like what Baafi mentioned, but I think the delayed gratification makes a lot of sense, right? I think small decisions in your 20s can lead to big wins in your 30s. Sometimes those decisions don't seem like they're the fun decisions. They're the most fast, rewarding. I become rich tomorrow by gambling on a certain app, but compound is what's going to get you there quicker. Because these, right now we're in an age where prediction markets and gambling apps are becoming a thing, but easy money comes and easy money burns quickly, and that's known for a lot of people that are professionals and been doing it for longer. And they seem to, quick money goes away quick because you want to go back and get more of that quick money, and you end up risking it all. But that was a little bit long on the on delayed gratification. Uh, but that's my 2 cents on, on your 20s, just make the right decisions so you could land at a good place in your 30s, or even if you're in your 30s, you land at a good place in your 30s. Just give yourself 5 years, which is kind of what you mentioned there, Josh.
Yeah, especially, and I want to highlight, especially in bull markets, right? Because like
Yeah.
everybody
Yeah.
becomes a prediction expert and a stock picking expert in bull markets, like right now. When in reality, it's like, sometimes the market's gonna come back to bite a lot of the people who get ahead of themselves. So just kind of be careful out there.
Yeah.
Yep.
But let's go ahead and jump over to the next question. 2025, we experienced a big shakeup back in April with the tariff sell-off and all this uncertainty around what was going on there. And let's give some insights around how we all kind of handled it. So like maybe we'll go around and just explain maybe how you handled it personally and what was some of the key takeaways from that moment with all of the panic that was going on. I mean, social media was flooded with people predicting the Great Depression. Uh, I felt like the Market Hustle was one of the few pages who was trying to, fight against that herd a little bit. But nonetheless, I'd love to hear kind of what you guys, like how you guys kind of experienced that moment back in April. Baafi, do you want to jump in first again?
I'm down. Let's roll.
Let's
Let's
do it.
roll. Let's do it, man. So one, I think it's important for me to give a little bit of context and background because one, it's not my first time seeing these heavy swings, right? These corrections or bear markets, however we want to classify it as. In fact, I've been investing over 10 plus years, and anybody that's been listening to the podcast for some while is aware of that. And so I've seen at least minimum 10 of these type of moments throughout time over the last 10 years plus. So I've kind of been accustomed to that process and it's kind of normalized in my experience because it's not really something that I react to it emotionally because I've seen it time and time again. If anything, I get excited knowing that I can buy some stocks or buy, more assets on a discount. So during the sell-off in April, I was just buying pretty much, which is essentially all I do, whether things are up or down. But I think strategically, more practically, one of the things I kind of looked into a little bit more research-wise was like, okay, with the tariff situation, how does this impact economies? How does this impact certain industries and sectors, right? That essentially deals with a lot of global trade and what the cross-border situation looks like and the cost of their products and the business of their products. So I looked a little bit more into those type of things. I felt like wherever the tariffs impact the most, for example, if we look at oil, wheat, commodities, certain goods that is from different countries all over the place. Automotive, right? That was another area that was a very interesting topic during April. Some of these stocks were just decimated. I mean, they were just getting cooked. If the market was down 10%, some of these guys were down like 30 to 40%, right? So I looked at some of those lucrative opportunities and picked up essentially the top two best companies within those industries kind of across the board and just kind of ride it out for a bit. So that was like in terms of like what I did aside from just the the old like the typical saying of buy the dip, right? Strategically, I dove a little bit deep into the sectors that are heavily influenced and impacted by the tariffs. And so people are like, okay, the tariffs going to be crazy. So those stocks getting cooked. I'm like, all right, I'm picking them up because I know eventually they're going to bounce back. And for some reason, the tariffs haven't had as much impact as maybe we might have thought, right? So that's been nice.
That's
Yeah, I
awesome,
was
man. Oh, go ahead, Fernando.
I was going to mention I was actually very bullish on that day, and it's a different story because I wasn't betting on buying the dip. I was more betting on it going like the market going up. But then once he took out the list of different percentages, that's when the market decided to dip, and we had to you know get out of the market and then go into futures at that point because there's in the futures you can buy the downfall instead of it being bullish. You buy the bearish side of the market. So that was my experience for April, where we had to shift immediately once we started seeing percentages of negative on our portfolio.
Yeah, for context, I remember that. That's when Trump brought out that big poster board
Yeah.
of all of the countries and like what they
Yeah.
were getting taxed. That was crazy. And yeah, the market did not like that because the market doesn't like uncertainty. And that's going to be a common theme here, especially if you're new to the podcast, is the market is always trying to get ahead of what's going on, and it can kind of turn into this Warren Buffett calls it Mr. Market. You know, they kind of refer to Mr. Market. Like sometimes Mr. Market can get a little drunk, where he starts making these crazy, irrational decisions. And as a new investor, I think it's easy to get caught up in the short-term chaos, and it's particularly why we always mention to build your foundation first. You know, like set up those index funds. You know, keep things as simple as possible before you start going out there and trying to do some of the more advanced stuff, because a lot of times the reason why people lose money in the stock market is because they think they're the next Warren Buffett, and the market ends up humbling them in one way or another. And so we hope that you don't have to deal with that. I think we've all dealt with our own set of mistakes throughout our investing journeys, but just something to kind of keep in mind is like the short term, the market can be kind of bipolar and it might not make sense. But the long term tends to benefit the asset owners, the people who don't really pay much attention to the short term, ups and downs, but continue to stack quality assets from quality businesses that have a good track record at generating profits and making their investors richer. So kind of keep that in mind. Pierce, what about you, my friend? What did the April 2025 tariff scare kind of look like in your world?
Dude, okay, so for people who don't know, I've been investing for like 5 years now. I was like 17 and a half with an actuarial account through my dad. And so if anyone knows anything about the markets since then, it's been pretty damn good. And so for me, it's like, oh, obviously this game is pretty easy. You just throw money in, it comes more the next year, blah, 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 blah. And then April hit, and then my dad, he's like, "Hey, did you see the markets today?" And I was like, "No, I woke up. It's 10 o'clock at 10 o'clock in the morning. No big deal." And I look at my portfolio and I see him down a substantial amount. And I pause and I sit for a second. And obviously it sucks seeing that, you're down however much you're down, but I mean, dude, it's a long game. I'm not playing this for 5 years. I'm not playing this for 10 years. This is like a 30-year game for me. So for me to see like that percentage down, it didn't really affect me. But I mean, I, the biggest like the biggest thing I've done with my portfolio is I have not grown attached to the money in it to like it just feels obsolete to me, right? Because it's just like it's just numbers on a screen. And obviously, yes, it does have real effect. Yes, it's real money, blah 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 blah. But it's just, you can't get personally tied to it because there's going to be fluctuations in the market. Like Baafi said, he's been in this, he's been in the game longer than I have. So Baafi's seen this before. You guys all have seen this before. But this was my first really downside of it. And you obviously just got to take a step back. And the whole thing is like, I don't know. My dad said, "Do you bet on America?" And I was like, "Well, yeah. Do I think America's going to go anywhere? Well, no." Then, you should probably stay invested, dude. So obviously, my dad was right. And since then, it's been pretty damn good. But yeah, it was just a fluctuation, a little blip in the radar. And 10 years from now, it's probably going to have no effect.
Yeah, no, and I think there's a lot of power in having that, being able to zoom out during the times of uncertainty and chaos. Because I will say this, like, it's going to happen again. Like, there's going to be another moment where everybody takes a pause and starts to think the whole financial world's going to blow up and it's going to go to zero. And it's what you do or don't do in those moments that kind of make or break you as an investor. It's the whole reason, like right now, like, there is a little bit of, choppiness in the market that there has been in like November and December, but relatively speaking, it's been more or less a decent year. And actually for 2025, the market, we're above 10%. It's like we're still, this is actually a above average year, believe it or not. And I think we have as investors kind of gotten spoiled with outperforming years, especially over the last 5 years. It's like, we've seen like 20% stock market return years like pretty commonly over the last 5 years. And I do think people kind of maybe get used to that. And so like this year, like it seemed a little bit more chaotic, but actually historically it's been an above average year, believe it or not. I think it's important to kind of have the context around that because if you can implement a long-term mindset or be able to stop yourself and kind of zoom out and be like, okay, what's my plan? Like, why am I investing to begin with? And are the businesses that I'm investing in, do they have a track record at being able to pivot and continue to grow despite what's being thrown their way? Something like the S&P 500, which is very American, it's the top 500 American companies essentially. This group of stocks, the reason why so many people talk about it is because, well, for one, America's kind of designed to like generate profits. So like you're kind of getting your share of that by investing in something like the S&P 500. And the best part is if a couple of companies start to screw up or maybe they can't bounce back to whatever the business environment throws their way, they get kicked out, they get booted out, and then they get replaced by whatever companies are posting results in that specific business environment. So it's like I think understanding the strategy that you are implementing is very important because in bull markets, it's easy just to kind of know the surface level. Like, oh yeah, I heard about the S&P 500 once. I heard about VOO. Everybody says to buy it. You buy it. But then when the market gets choppy, you're going to be the first to kind of fall into the fear traps and all the noise, the doom and gloom, because you don't really know what your portfolio is kind of designed to do. And again, there's other strategies out there. Like some people don't only want to be in something like the S&P 500, and luckily there's global funds that give you exposure to every stock market in the world. So there's something out there for everybody. But I just want to highlight that that's exactly why it's important to take the 10 to maybe 15 hours of homework time or research just to kind of make sure you understand what you're buying when you invest in a stock or even an index fund. Again, you're kind of preparing yourself mentally for when chaos hits, and it will again, so that you don't get sucked into all of the fear and doom and gloom. But great stuff, Pierce. Thanks for sharing that. That being said, let's go ahead and pivot to our next question. So we've covered our big lesson of 2025. We've covered kind of how we thought through the big sell-off in April 2025, which was one of the bigger sell-offs since COVID, believe it or not. So kind of crazy. Let's jump into our money and investing beliefs. Are there any money or investing beliefs that you guys maybe changed this year or changed your mind on?
That's a good question. I think for me, this is gonna be a little bit of a vulnerable moment, slightly. And again, that's why that's why everybody comes to listen to our podcast because we're real, we're
Sure.
transparent. We share our lessons and we share our victories as well. I think that at some point in the past, I definitely underestimated crypto, more specifically Bitcoin. All right. I've always, and in past episodes, I've always mentioned the utility value of it, right? And how it can be used and leveraged. But I've never truly, and probably maybe still to today, I've never really truly recognized it as an asset class that is worth that price, right? Like the price points, the valuation that is at and what it's trading at, given what its utility value is and what it doesn't produce. Right. So for me, I've always wrestled with that. But I think obviously the numbers are the numbers, right? So from a technical numbers perspective, not from like a life perspective, I definitely missed the boat on certain pieces, right? But I don't regret it because I'm doing great still, so that's not a problem. I just think that it would have been nice to have enjoyed that write up over the last 5 years, and it would have been nice to know about it like 10 years ago. Who knows? Maybe 10 years ago I would have taken advantage of it. Maybe I wouldn't, right? It's like many of us hear stuff decades ago and we don't do a damn thing about it till decades later. We're like, oh shit, man, we should have put money over here, we should have done something. But at the end of the day, I think I underestimated it a little bit. It doesn't necessarily mean that it doesn't have value, right? But it doesn't necessarily mean that wherever we have it priced at is the appropriate pricing for it. Maybe it's higher than it should be. Maybe it's lower than it should be. Who knows, right? But at least I can say that I've had Nvidia for over 10 years, so that's been good. That's as close to as Bitcoin as I've gotten, I guess. So I think for me, granted, this year Bitcoin is pretty much flat or down, so that's a good opportunity there. But I think I definitely underestimated it over time, and hopefully I'm looking to kind of make a little bit more room within my portfolio, have a tiny bit more exposure to it. So yeah, I think that's I would say that's probably one of my biggest lessons of 2025 when it comes to my investing beliefs and how I've kind of adapted to the changing world and how things are moving now. Yeah.
Yeah, no. First off, I respect it, Baafi, and I think especially for us, like we're very stock market heavy, and crypto itself is just a completely different animal. And I think as an investor, especially somebody who focuses on fundamentals and cash flow, it's like it can be easy, if that's where you're like specializing your investing power, if you will, then you're not going to be able to catch everything out there. And it's a good also investing growing moment. It's to be able to admit like, hey, maybe I could have done X or Y in the past, and now you'll be more open to potentially seeing other opportunities in the future. So like again, it's just a massive growing opportunity, and I think that's awesome. For me, like I have a small position in Bitcoin. Like of course, like to Bafi's point, hindsight's 2020. It's like of course now we could sit back and be like, that would have been nice to put like 80% of my portfolio. I think it's important not to like get resentful as an investor or even prideful um,
Yeah.
or just kind of beat yourself up because that doesn't do you any good as an investor, and it for sure is not going to help you take advantage of the next wave of opportunity, whatever might come our way 5, 10, 15 years in the future. So great lesson for anybody else listening, because I'm sure we've all experienced some sort of investing decision we would have wished we would have made, and we didn't make it. So it's normal. That's what happens. And we're human. We can't know every single asset class or every stock or every company. Even Warren Buffett, one of the greatest investors alive, he missed out on a lot of tech stock growth over the last like couple of decades. I mean, recently he's kind of gotten exposure to Apple and now Google, but he always stayed in his what he would call circle of competence, like what he actually understood and what he knew, and he still clearly did really well for himself. It's like you don't always have to be in the assets that are outperforming. It's like there's lots of different ways to win in the stock market. There's not one single way to win. And don't let anybody tell you that there's only one way because, yeah, there's so many different asset classes and stocks. And that's not to overwhelm you. But that's just the reality of the situation is that don't hit yourself or don't put yourself down for maybe not making the move you wish you would have made. I would say for myself, I think what I really changed money wise is I got more comfortable with spending, hence the two trips going to Japan. I'd say my early 20s, especially, like I was very, spend the least amount of money as possible and just stack as many assets. And of course, like I still invest aggressively even now, but I think this last year I have gotten a lot more comfortable with, spending a little bit more of my income rather than just thinking I have to invest every single penny. I think being, frugal up to a certain point is good, but at the same time, like you kind of have to have that conversation with yourself. It's like, what am I doing this all for? Why am I taking this money journey so seriously? Like, why am I investing so aggressively? Because it's easy to go to like the polar opposite. We all know the people who maybe overspend and maybe they haven't invested at all, and they're maybe in their 40s or 50s. Like a lot of people just were never taught this stuff, and they kind of end up in that situation where they see money as a spending voucher, and unfortunately never learn money skills. But then what we don't really talk about is the polar opposite, where people get too obsessed with investing and growing their net worth, where maybe they forget to enjoy their life a little bit more. So I'd say for me, I've definitely spent more intentional efforts at taking trips or going to nicer restaurants and whatnot. Especially now that I'm at a point to where, gratefully to my younger self, I'm in a position where if I never invested another dollar, my retirement's going to be set. So it's like now that I'm in my 30s, it's like the reason why I built this life is so I can, travel more or enjoy more time with the people I love, friends, family, or, build my business. I have the market hustle. It's like continuing to build that. Uh, Really, the whole point of this journey, even what I said earlier, is to build more options for yourself. And I think for me, it's continuing to expand on that and, you know, still invest aggressively, but also make sure, when you reach a certain point, like when you're on track to hit your financial freedom number, it's like you can kind of, enjoy the fruits of your labor a little bit more, so to speak. A good book that I read to kind of help with this or even change my mind a little bit more on the spending versus investing decision or balance is Die with Zero by Bill Perkins. He has a really good message around kind of finding that balance and maybe helping challenge some of the beliefs you might have, especially if you come from like a financial survival mode, and then maybe you kind of pivoted to the polar opposite of that of just stack as many assets forever and never spend money. His book really kind of helps challenge some of the perspectives or maybe limiting beliefs that could be holding you back from just benefiting from what you've already built. Yeah, that's kind of what I've been. I guess the biggest money belief change I've had was, yeah, just spending more now is okay if you've reached a point to where it makes sense mathematically.
Yeah, if you can afford it.
If you can afford it, key points, and it's a little bit nuanced. Uh, I think again, you might need to spend a couple of years of locking in and not spending much, being frugal, investing aggressively.
Yeah.
But then there comes a point, it's like eventually you want to pivot away from that. Like you don't want to be in that that mindset forever. It's like you don't want to be the richest person in the graveyard. Doesn't really do you
Yeah,
much.
man. Or you don't even want to wait till like 65, 70 to travel, and now you're falling asleep on the boat in Venice, man. Like you now you just like on the cruise and you're just asleep, dude. Like it's like yeah, because you think about it, as you get older, you get tired quicker, right? Like the movements, the traveling, the up and down. Who knows? Hopefully you're in great health, but it's easy to at that point have knee problems, your knee hurts, your back hurts, all types of stuff. And then you're being dragged across the world. That's like, yeah, that ain't it. You know what I'm saying? So if you have the flexibility or the luxury to have a good balance, to Josh's point, definitely do so. I'm also curious to hear what Pierce and Fernando, in terms of their investing beliefs, that they've changed this year. Like, and I'm really curious because I think Pierce brings a really interesting vantage point, and he has a certain advantage in terms of time and getting this information early. And I think Fernando, with his trading skills plus the mixture of long-term strategy as well, to me, I'm like, yo, these guys are like geniuses, man. And sometimes I don't think they get the credit they deserve, so I want to make sure that they get their flowers tonight.
Let's go with Pierce. Pierce, you gotta give us some insights, man.
This year's honestly changed like a hell of a lot, man. Kind of like you were saying, it was, I don't know, the way I grew up, and I think some people can understand. I came from Eastern European traditions, right? Like where you're very, 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 you're very frugal and like kind of money under the mattress, save your money for a rainy day, blah, 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 blah. But then there comes a point to where you kind of not have enough. There's, what that's the whole controversy of the world. What is enough, right? We all have enough right now. But what is enough? But it's just there comes a point to where, like Josh said, you meet this number, and then you start enjoying life. And so that's one thing I've been doing, and I've been enjoying life. This year I went to the south of France with my girlfriend. We got to go travel over the south of France for 3 weeks, and it was an absolute blast. And so for me, it was kind of breaking those chains off of what I've learned my entire life of saving money. And like, I've been working for the last 6 years of my life. I had chores. My dad would pay me $2.50 to pick up the dog poop in the backyard, right? And so that's how I got my first, that's how I started learning about money. And I would save it, I would save it, I would save it. And then, you go spend it all, but then you have nothing left. But if you only spend increments of it, then you're okay. So it's just kind of enjoying life. I mean, I'm in a very, very blessed place in my early 20s right now, to where I have the flexibility to kind of do these things that not many people do. And so, hell yeah, dude, I'm gonna take advantage of it. I mean, that's absolutely what I'm gonna do. And you can't, maybe if you were in my shoes, maybe you wouldn't, but I am. So I'm taking advantage of it. And I am staying very traditional when it comes to things, right? Like Baafi's said with his exposure with crypto. For me, I'm perfectly okay with missing out on whatever crypto. If crypto goes to 1 million, good for the people who own Bitcoin. Doesn't affect me one bit, because no matter where in my life, I don't think I'm ever going to be invested in that. Unless it comes a new universal currency, it's just not for me. But yeah, just enjoying life, man, and kind of you're not promised, like, like you said, going to nice dinner with your family, with your friends, going, like, I just recently planned a trip with my friends. My friends and I are all going to Europe this summer. So that's kind of what I'm looking forward to, enjoying my life. And, you know, I don't know. My dad's always told me this is the time to kind of do stupid stuff. Don't throw all your eggs in one basket, but kind of have some fun with life if you can. If you can afford it and enjoy it, enjoy it.
Yeah, no, I think it makes sense. And of course, to your especially to like your family's financial credit, it's like they have done a really great job at making sure you're financially educated from an early stage. They made a lot of sacrifices in their life, and that's gotten to a point to where, for you, like, you have more options available to you, and you don't have to sacrifice or deal with a lot of maybe the survival mode of finances. And to your point, it's like, why would you need to sacrifice something you don't need to sacrifice? It's like,
Yeah.
you should enjoy more of your youth if you're in a position to be able to do so, or your younger ages of being able to travel more and whatnot. Like, it's a mathematical equation, right? That's what it is. And of course, there might be some people listening like, oh, easy for him to say, or I wish I could have, maybe done that in my early 20s or whatever. And it's like, we all do. Like, of course, it would be nice to kind of go back in time and change the decisions maybe you made, or even your previous family made. But at the end of the day, it's like, we can only control where we're at currently and make decisions from there. And if you are somebody who is maybe the first in their family to break generational curses and maybe pave a new path, it's like, yeah, it's much harder. I was in that situation. It's like, my family doesn't really have much financial knowledge or even the support system, and it's much difficult to pave your own path and pave a new path. But the good news is, like, you can be the one to kind of change the direction. It's like, you don't have to just sit there and kind of take on the beliefs of where you kind of came from. It's like, the best thing about being human is, like, you can change your life or your direction at any time. It just takes the commitment and effort and focus to do so, which of course is hard. But that's why we have this podcast. Like, the podcast here, we have what, over 60 hours of financial education, financial growth information. We've covered so many topics. Like, if you just listen to this podcast alone, it's literally designed to kind of be a support network along your financial journey. And I get DMs every single day from people in the community who have said that, it helps them, grow along their financial journey. And I think it's easy, because I just want to call out, like, it's easy to kind of compare yourself to where others are at, to where you're at. And it's like, maybe you dealt with different situations. Like, maybe you had somebody who was sick in your family, or maybe you were sick, so like you had to start your financial journey later. Maybe you're going through a divorce. Like, there's so many different situations and scenarios that can kind of cause somebody to start their journey later in life, or maybe have to pause their financial journey, and then they start to feel guilty about it, like, now I'm behind. It's like, we got to stop comparing ourselves. Like that's the thing. Like for me, it's like we got to stop comparing to where we're at in our current journey to where other people are at or what they're doing because it might make sense for them. It might make sense for somebody who maybe they're older or younger, maybe they're in their 20s or 30s, like they can kind of balance their life more. And then it's easy to get resentful and be like, easy for them. But I just want to remind you that the only journey that matters to pay attention to is your own journey. And the minute you start getting caught up in the comparison loop and, even just the judgment loop of, demonizing other people because they're ahead and, making these justifications, like it's only holding you back. Like it's such a losing game. And we got to pay attention to the future and to the moves that we can make now because the good news is like there's so many people, myself included, who you can make significant changes in even just a couple of years. And really, what it comes down to is continuing to surround yourself around the environments, the information, to where you can learn, like kind of soak in the insights, hence the podcast, and kind of distancing yourself away from more of the environments that might kind of be pulling you back or holding you back. Like I have a lot of family who, if I start talking finance, everybody kind of comes at me, right? They think they got it all figured out, and we're in completely different financial situations. And so like sometimes you just can't have certain conversations in different environments. But the sooner you can get yourself in environments that are more empowering and more insightful and just more, I guess, level-headed and balanced when it comes to especially money and finance, the easier it is to going to be to continue your own financial journey because we want to see you all, advanced and grow. And again, one of my favorite things is getting DMs from people in this community, in the podcast and the Instagram, and just hearing about the progress you've made, maybe because of something you heard on this podcast or a post you saw or an email you read. To me, it's the most fulfilling work, and I think that's why we like to share. We like to bring guests onto the podcast because you get to share your journey to help inspire other people who are maybe in your shoes and kind of starting from zero. So a little bit of a rant, but something to kind of keep in mind because I think it is easy just to get lost in the comparison loop and maybe you hear the successes of other people, especially if you're early in your journey. And it can make you kind of feel like, oh, maybe I am behind. The good news is you're always early to the next stage of your financial future if you're ready to kind of make that change. Like maybe you're in your 40s or 50s, and I know we got a lot of people that are a little bit older who listen. And the good news is the next 5 to 10 years can look very different than the last 5 to 10 years if you don't get lost in the comparison loop and just focus on what you can control. Fernando, what about you, my friend? Are
No,
there any?
I think what you said makes a lot of sense. I think like once you're initiating your like say you're at like zero, right? Sometimes we traders test that zero sometimes, right? Like we hit zero in a certain portfolio, right? And we made this much in a portfolio and we went back down. And what you learn there is the lessons of going down instead of going up, right? Sometimes you have to learn that lesson. And I think foundational wise, when you're at the start, I think you have to like kind of take in all of the lessons and grab as much knowledge as you can to build that compound build foundation to then be able to do these like advanced tradings and get into futures or other individual stocks or options. And that's kind of going back to like what you were saying is that you just got to be careful with your decisions. And also once you start seeing profit, don't get greedy with that profit and make sure that you diversify that profit and go into other places where are more conservative. And then that's when you start building a good, strong foundation over the years, of course. Now, going back to the disbelief question, I think that I was a little bit reluctant when it came to venture capital. And I thought that, they had big percentages, administration fees, and commission fees and all these other fees. And I started kind of digging into it, and I got into it recently earlier this year, and I started seeing how SpaceX is now going to be able to go IPO next year. And I never knew how that all worked, right? Like what happens to the shares you have inside a venture capital company, and then when they become public, what happens? And I learned that once they go public, the venture capital buys that at that rate, but you never get that profit. It kind of just buys into the fund. And then after like a certain amount of months, is when you start seeing that in the NAV, which is what they call I think value. of the venture capital fund itself. So that was interesting to learn. And I was always like reluctant to get into that because I thought it was too expensive to get into venture capital. And I think that's something that I learned this year, kind of diversifying from other, trading styles.
Gotcha. Yeah, that's interesting. Especially because like it seems like from your perspective, like Fernando specifically, like you like to be more on the active side of investing, which for the listeners, you just have a higher risk tolerance, really what it
Yeah.
comes down to. You can kind of hear it in the way you kind of talk. A lot of what you speak on is risk management. So like it's not only you're just going out there and be like, yeah, I'm playing Russian roulette, hope something kind of pays off. It's more the discipline side of it. Like you're kind of being intentional. Like you're taking riskier moves or investments, if you will, but you're also kind of hedging yourself in a way to make sure you're never
Yeah.
exposed to a complete blow up or you get screwed to where you make the wrong move and everything goes to zero. Hence the diversification. Like we everybody hears diversification in the long term investing world. Index funds are great for that. Something like the S&P 500 and the Nasdaq 100. They spread all of your money across hundreds of companies. But even in more of the active investing side, a lot of these private equity companies or venture capitalist firms, they're taking these micro bets on all of these very risky companies, and they're kind of intentionally going after like a basket of maybe hundreds of these risky startups, and they intentionally go in knowing that 98% of them are going to go to zero. The reason why they make it work and why the math kind of works is because they need only 2% of them to kind of have that exponential payoff to make it worth it. And so, like, there's, again, I don't want to get too into the details of things, but there's a lot of different strategies in the investing world. And on one end, I think it's good because if you have an interest to explore different areas like Fernando, it can kind of turn into like a thing for yourself. On the other end, it's also easy to get lost and you can kind of get distracted. And so, like, I think even if you are listening, like, I personally I've done options. I've even, I have an active stock portfolio, but I personally like wouldn't touch any of the advanced stuff for at least a couple of years. Like build the foundations, make sure your finances are in order when it comes to like budgeting and money management, and then it's a lot easier to kind of try out that stuff if you actually want to go that route without kind of blowing everything up. But thanks for sharing that, Fernando.
Yeah, and I think as I listen to Fernando share that VC learnings and some of the things he's been doing throughout the year, one thing I picked up from him is that like you can tell he actually enjoys the learning process, right? And learning how these things work. And to me, that's the key to succeeding in anything, not just in investing. Like having that curiosity, the willingness to take it upon yourself, right? That ownership and learn to me is what really makes one successful, especially when it comes to investing. So, for those that are out there, you want to diversify, learn something different, or maybe know how to trade, whether it's options, X, Y, and Z, whatever you name it. The the starting point or the source of life that's going to allow you to actually succeed in that is that curiosity and the ownership of learning and you becoming the asset with the knowledge, the information, so you can then properly execute. And that sounds like what exactly Fernando did especially with the venture capital space. So kudos to you, man. That's cool. I learned something new just now listening to Fernando, man.
Always plenty to learn out here in the good old stock market world, investing in general, bad. Well, let's hop over to our final question of the podcast. We've kind of been rolling through these. I think we're right about an hour in. This is a good episode. It's a good reflection episode for all of us, and hopefully for the listeners, everybody listening in. I think we've all
I was
kind of
gonna
come on. Oh, go ahead, Fernando.
Yeah, I was going to mention something. So, something that I missed when I was talking about like the beliefs and all that, but I think you touched it pretty well, and you touched it pretty well on the market hustle page, right? I think that the S&P 500 always does what we call rebalancing, right? They look at different companies that are not performing in the year, and they adjust to companies that, have better potential or they've been doing very well internally with their revenue or whichever parts of the business that, move that stock. You can do that yourself individually. So like if you're compounding and you have a portfolio before the year ends, and that's why I came to tax harvesting, right? Before the year ends, you have to look at the, different stocks you're holding in your portfolio. If you're diversified, not only on ETFs, if you're doing individual stocks as well, which I've seen many people do as well, they hold different stocks. and one is not performing at the percentage that you want it to, I think it's time for to cut that loss, and you can use that loss for next year to report it against your capital gains of this year. So you can actually, do tax harvesting and then you do capital loss claim or what you call it, and that you can use against what you gained as well. So that's kind of part of like tax harvesting, which is what I meant in the beginning, where if something's not performing, you rebalance and cut your losses now before end of year. So next year you can claim those losses against your capital gains.
Good point. Some good insights right there. The one thing you want to watch out for is if you're going to make this move, look into the wash sale rule. Because if you
Yeah,
repurchase the same stock right after you sell it, the IRS is going to cancel out your deduction. So
exactly.
make sure you
Yeah,
understand that. I think to Fernando's point, it's like if it's a position where you're just like, I'm out of this and, hey, I can harvest some tax losses, then yeah, it might make sense. But good stuff. Let's jump into the next question, kind of to wrap it all together. And that question is, if your 2035 self could see your financial moves in 2025, this last year, what do you think they would say or what they would think?
All right, I think I'll speak to this in two folds. One, I think that my 2035 self will be appreciative and impressed with my ability to just get things done, right? Because too often we take everything very personal, right? Like it's easy to point fingers, whether it's at our parents, whether it's in our at our environment, whether it's the government, right? Whether it's Trump. I mean, these days we could, we could just kind of blame anybody for anything now, right? And I think having that core of being able to get things done, whether you feel like it or don't feel like it, whether you have enough or feel like you don't have enough, that grit, right? That grit is really a very, very important piece to doing well in life, not just with investing. So whether it's with physical health, whether it's mental health, whether it's with education, right? Like we always speak about learning and continuous learning on this podcast, whether it's with investing and with our money, whether it's with our relationships, right? Like the ability to get things done. I think my 2035 self will look at my 2025 self and look and be like, dang, like okay, I see this kid was onto something and grateful for that. So that's one. Second piece is I think my ability to know when enough is enough or be okay knowing that everything is not for me, right? I think that's really, really important. And I think the future me will appreciate that because there are a lot of people that, and part of it is human nature too, right? Especially many of us don't come from much. And so it's like, hey, we've been dreaming about having a decent amount or more than the average amount. And so we're like, some of us have dreams of like, oh man, I want to have 10 cars or I want to have 10 houses, whatever you want to call it. And I think it's important to dream big and have ambition, right? But I think we need to also analyze and retool and re-strategize as we get closer to our goals is right because at some point you have to stop asking what's next and start asking is this enough, right? Does this meet the most important qualities of life or the what I want to get out of life? Does this meet it? And if it does, then everything else that is added should be more lucrative. One, icing on the cake shouldn't take as much investment or time or energy away from the things that you work so hard to build so you had time for, whether it's family, all these other pieces. So I think knowing when enough is enough is something that many, many people wrestle with, and it's not an easy thing. And the fact that I feel like I have a pretty good grasp on that, for example, some people might be like, okay, they need to have three, four houses. I don't care. I could have one house. I'm good. Doesn't matter to me. The rest, you know what I mean? Like I don't need more to make me feel adequate, or I don't need to have certain material things, or have to see all 100 and some 20, 30 countries in the world for me to feel satisfied or adequate. And so for me, I've been fortunate to be able to discover that balance much early on in my life. So I live with a lot of peace, a lot of calmness, a lot of equanimity, and it's like that even keel type of vibe. Nothing really bothers me. I'm never bored, but I can be excited about something, and that, like, just that realm of just being able to operate within that realm despite everything that I see online or others talk about and stuff like that. I think my 2035 me will really appreciate that because many people not just reach their goals, but because they don't recognize that, hey, I've already won. right? And now they're stressing themselves even more. They're adding even 10x pressure when it's not really necessary at times. So if you're somebody who's been very successful, fortunate, blessed, whatever you want to call it, take a moment, reflect on the year 2025, think about 2026, and start considering, okay, what are some beliefs that I've been holding on for so long from my inner child or from my lack of or scarcity or fear that could potentially ruin everything I've worked my butt off to get at this point in time in life, you know? So that's kind of my 2 cents there.
Yeah, that makes a lot of sense. I think what you mentioned, it relates a lot to what came to mind immediately was turning down the noise. I think we get too involved in like this social media or other noises that can come in life, family. Sometimes like there's different noises, and being able to kind of do like the AirPods where you noise cancel like a lot of that and you focus on what life is and what you have in front of you. I think it relates a lot to what Bafi's saying. It makes, I like what he says, it's there's so much importance in what you have and what you're comfortable with and what you like and what makes you happy. And living with that, if that makes you happy, then be that, right? Not want to be greedy and want more or take away more from others. Of course, I think the asset portion of it, I think you want more of it. Like for me, I would want a little more assets because at some point, assets tend to collect like Monopoly, like the game, and you end up kind of winning the game in a way. But
Exactly.
that's also maybe a bad way to see it because it's not a game either. I don't know. I'm kind of contradicting myself here. If it's a game, you're trying to beat others, and you kind of got to swim in your own lane and not look to the other lane because you'll lose. And you have to focus in what you're doing by yourself. But I think for me, 2035. I see myself more like what Bafi's saying, like enjoying life, and you posted it before, Josh, where luxury is to wake up and do whatever I want, right? And that's something that I want to be able to do, to just enjoy life, family, and wake up and say like I want to go do this, or I want to be able to do so many things in the morning without having to worry about a calendar invite or other things that can turn on the noise
Yeah.
in your life. So
Or even being able to work on whatever you want to work on. Because like I know there's a lot
Yeah.
of people is like, oh, you know what? I don't want to just retire and do nothing. It's like, all right, retire and work on what you want to work on. Like you have more
Yeah.
options if you want to start a project or even do like charity work. Like if you don't want to make money, like whatever it is, it's like the
yeah,
point isn't retiring and sitting in a chair and rotting away. The point is options. That's what we're
Yeah.
after. Like that's the goal. To Fernando's point, like yeah, assets is how you get there. Stacking assets is how you build more leverage over
Yeah.
your income source because the truth is we're always going to have bills. Like it doesn't matter if you're a billionaire or whatever. It's like you're still going to have bills in one way or another. Even if you own the power plants and like that's your business and you own the water company, it's like you still got to pay the IRS. Like you're going to have that tax bill that's still coming. I was like you're always going to have bills. And the real point is to get to a point to where you have control over your income source. That can be through stocks. That could be through real estate. That could be through crypto. It could be through owning your own business. I know we have some entrepreneurs who kind of listen to this too. Like there's many routes to go. There's not one way, but the only way, like the one way where they all kind of align is by ownership, like stacking ownership, owning the income source that pays you, because like you're not gonna a job itself can only go so far. You can only work so many hours before your income potential kind of caps out. Where with something like stocks, investing in the stock market, when your stock earns some cash, it goes on. You can purchase more stocks and you can buy more of them to earn you more cash. Like it's kind of like this cascading effect. It's like you buy one stock, maybe it gives you the power to buy two, and then those two can buy you four, and then those four can buy you eight. Like it compounds. That's what you're kind of after when it comes to the investing game. Yeah, don't get caught up in all the noise in the beginning as well when it comes to the different options. That's why I tend to say start simple. Stick with index funds in the beginning. Build that emergency fund. I know it doesn't sound sexy. It can sound kind of boring, but that foundation is what's going to give you the platform to make different moves. Maybe a couple years down the road, maybe if you want to start your own business, or maybe you want to, start investing in real estate and kind of build a real estate portfolio, like whatever the hell it is, the sooner you start stacking assets, the sooner you can start paving a path towards that direction. So good stuff,
Yeah.
Fernando.
Yeah, Fernando, that's really a good point that you mentioned too, and I think to your point that it is important to be ambitious, right? Because you want to have a certain level of flexibility, independence, and that's really how you win the game, right? I've come to realize a lot of people also downplay their wins, like their actual wins, right? Like so, some people might graduate from college and think it's actually not a big deal. Like, no, dude, like think about it. If you're the first person ever in your lineage and bloodline, especially if you're like a minority coming from a whole different country, and it's like, your country may not be the most advanced or don't have the right infrastructure, you don't have access to school or like clean drinking water, right? I mean, you think about where you come from to where you're at as a college graduate in a first world country or whatever you want to call it. That's a massive win. But a lot of people get so stuck on the top prize at the top of the mountain that they forget that each stage that you climb on the mountain is worthy in of its own celebration and deserves the appropriate time and simmer and reflection, and then you move on to the next piece, right? So like now you go on social media, you see people. I mean, we're at the end of the year, so everybody's like super excited to probably share how their portfolio is doing, how much money is made the year. And somebody might have like a 10K portfolio and think, oh man, this person has a 100K portfolio. I have a 10K portfolio. That's nothing. No, that's something. Don't lose sight. Like, don't cancel it out by telling yourself it's nothing. And then next thing you know, you're not, it's like you lose steam or motivation, or you start trying to take shortcuts, right? Or second guess the process. It's like, no, you want to let that sit and simmer. And Fernando's point too, I can see like where this really also applies to trading, because some people can easily get greedy, or some people can be like, oh man, I only made 500 today. And I've seen somebody online and they made 10,000 today. So now they're going to go balls to the wall and try to hit a home run only to get striked out. You don't want to be that guy. So I think there's a balance to it all. And I think it's really important that people celebrate their wins, because those, whether you feel like it's a small win or whatever progress you're making in the right direction, you want to celebrate those, because if that doesn't feel good to you, you're not even going to feel good when you do get to the top of the mountain,
Yeah.
you know?
It has a lot to do. It has so much to do with like discipline.
True.
I think
Yeah.
like, the way you trade is the way you wake up. Like if
Oh
you're
shit,
waking
I never
up,
thought of that. That's
yeah,
crazy.
like if you wake up late and you get into trading right away, you're not going to trade the same as the day you wake up early, you
Mm,
work out and you have a clear mentality, and then that day is actually more successful. So
mm.
even if trading is on a phone or a laptop or some kind of technology, your state of health and mental health too relates to what you do and what you delivered into what you're trying to, achieve in trading or, buying
Right.
assets. Uh,
Interesting. I never even thought of it like that. That sounds like it makes sense. I mean, if you wake
yeah.
up drunk, I mean, you can only imagine the type of day you're gonna have.
But it relates in a way too, because like when you're deciding between being greedy or making
Uh-huh.
that decision where you're like, this is it, right? Like I already profited, time to
Right.
exit, time to look into another. That decision moment is only made with discipline and not emotion.
Mm.
Sometimes people make decisions based off emotions. They get too high in the moment and then they don't get past that, profit they decided to cut into.
Yeah, that's
So
the DraftKings and the FanDuel people. They start stacking their parlays after like three. They see like plus 5,000. They just keep stacking them
Double
up.
down.
yeah,
Yeah.
and they get greedy, and then it goes back to like set levels, and they
Yeah, I mean, they have like a
lose
yeah, they have like a 10 leg
what
parlay.
they had. So.
Yeah, man, they have like a 10 leg parlay, and then like six of them hit. The other four don't hit, and all you have to do is just do six, buddy. You didn't have to go 10. You greedy ass.
Really what it comes down to is like play your own game. Charlie Munger said it best. There's always going to be somebody who's richer than you. There's always going to be somebody who's doing better than you. And sitting there kind of comparing yourself to that is just going to set unrealistic standards. And so like what Baafi said, it's like, you likely have your own life that you've built, and you probably have a lot of things that you had to figure out yourself that maybe others didn't. Like maybe you went to college, you were the first in your family, and it's like to you, like that could be a huge accomplishment and not something you want to downgrade. To somebody else, that could just be like the standard. And if you sit there and start to like compare yourself to what other people are doing, or like what, where they're at, like that's just a way to kind of end up miserable at the end of the day. And what really matters is the progress you're making in your own life. So if you're going from, point A to point B and you see somebody else going from point, E to Z, it's like, that's them. Like, focus on you because like sitting there watching them is not going to help you make progress to the next level. It's just going to make you kind of resentful towards the whole game. And social media has made it easier than ever to compare yourself to where other people are at because we see all of the lifestyles on display all over the place on social media, and it can trigger that comparison loop, which is it's a very strong human emotion in the stock market and investing, and even what Fernando said, like even in trading, like that comparison, or once you kind of get caught off guard and maybe you lose the discipline or the focus of your own life or your own situation, it never really ends well in any domain of life. So I think that's the core lesson of is, do your best to just, compare yourself to where you were last year. Like sit here and think about like, hey, where was I at December 2024? Where am I at now? And what can I do between now and December 2026 to continue to make progress on my own journey? Because for you, your journey is the only one that matters. Nobody's going to care more about your situation and your journey than you can. And so do yourself a favor and focus on the only game that matters, which is comparing yourself to where you were last year and focusing on what you can control now to get yourself ahead next year. Pierce, what about you, my friend, before we officially wrap up this episode?
My MO since starting investing was to be work optional by the age of 35. And that was an expectation that I set when I was, like 17. And I'm like, cool, I have this much longer till I'm able to retire. And obviously things change. And so by 2037 is when I am hoping to have that work optional, lifestyle. And so hopefully by then, I mean, I'm just going to keep on doing what I'm doing because it's been working so far. So hopefully by then I'll have 2 years until I'm work optional, and then I could say screw it and do whatever I want.
Yeah, that's quite the path to be on. And again, it's just a testament to the decisions, the past decisions, and where you're at, and what you're going to continue to do between now and the next 10 years. Because I'm sure life likes to throw things our way, so like it's continuing to make adjustments where needed, but also still continuing to make progress, continuing to chug forward, and continuing to stack assets. Most importantly,
Just rob a bank, bro, and you'll be there in like 2 years.
life hack right there. Not financial advice, of course. Well, do you guys have any last comments before we officially wrap up the last episode of 2025? I mean, for one, I think it's crazy how we put out quite a bit of content, different episodes, covered a lot of topics, a lot of current events as well, which was kind of a cool twist in 2025. And then we also had Vlad himself, the CEO of Robinhood, on the podcast, and many other phenomenal guests. We've had entrepreneurs and from Solid Core, just lots of different, varieties of people who have, they're in the wealth building world, investing in different ways and maybe have different ideas around money. But I'm curious to just see if you guys have any final thoughts to leave the audience with the last episode, 2025, going in the books.
Yeah, man. I would say one major thank you to everyone that have been on this podcast journey with us, the audience that have been tuning in, episode after episode, different topic after different topic, sending in their insights or what they're learning and gaining from the podcast. Anything they would like to see, just any communication, any value that have been added to their lives. We want to, make sure that they're recognized for that. Also, shout out to all the guests that came on, right? Josh just mentioned from Vlad to Stephanie to a lot of really high level folks at the forefront of innovation, technology, advancement, forefront of the economy, the direction things are going in, for them to spend some time with us and share insights from what they're seeing and things that they're excited about. I think that's really a special treat for the entire podcast community. And then third, I would like to just thank Josh, Pierce, Fernando for just being awesome people, just always sharing their life experience, their perspective, both the good, the bad, the ugly, the funny, the sad, just being real, genuine people that care about others and their well-being to continuously dedicate time, energy, effort, resources, money, you name it, to really enhancing the community, growing the podcast so more people can benefit from all the work that we all do and the impact that we're having. And then the last thing is, hey, make sure you shut it down. Spend some time with family. Turn the laptops off. Turn the screens off. I mean, there are some days where the stock market is closed, so you won't be able to trade anyway, which is good, right? It's like a mandatory off day. And just reflect on the year. Take a few brief moments, reflect on the year in a few categories. So, one being your physical health, mental health, your relationships, meaning your romantic relationships, but also other important relationships that you have, such as family, right? Your social life, those type of friendships, and then also reflect on your career, reflect on things you're curious and want to learn about, and start putting a game plan together for that, for all those things in 2026 if you haven't already. And just have fun, man. Enjoy. Shut it down. Take some time off. Relax. If staying away from social media is gonna help you relax, do that. If being on social media helps you relax, do that as well. And just have fun. Take it all in one day at a time.
Yeah, I'll go next on that. I think I'll piggyback to what you said, right? I think thank you to the community and just the listeners. I think this year was my year with you guys, and it's been great. I think we've done so much for the community. Something that comes to mind, like two things, right? From the word community, I think that some people want to get started, but they're hesitant to get started. They're like, I can't do it, or there's certain things that are holding them back. Like every decision we make in life, sometimes we hold ourselves back from making or taking that decision because of our, hard heads that tend to put fear in us and not wanting to take that step. And I think the best thing you can do is be part of a community or know somebody that is doing the same age, or even somebody that you want to look up to, like a role model. And you find that in a community. When you start listening to other people talking and relate to them or relate to something that sounds good to you and you can actually withhold within you is such a good thing to do for like to take the next step, either into investing or to any decisions in life. And I think knowledge is the second thing that I want to say. I think when you something that you should do is either whiteboard it or write it down. The amount of knowledge you gain this year, I think we can measure ourselves to how much we've learned this year and then what we want to learn next year. But most importantly, what lessons we learned this year. Like just like we did on this episode where we went back and thought about like, April, like how do we handle that? And there's different things that everybody had to go through. This year, many people went through different life changes or adversity, and uh, maybe look into that and find knowledge in that because that's the only way you get to keep. You don't really get to keep the dollar signs because that has to flow in some way or another. So knowledge is what you get to keep. Yeah, that's kind of like what I have.
Keep the money flowing. I love
Yeah,
it.
cash
Uh,
flow.
that's it. Good stuff, man. And we do want to eventually, we have some tentative plans for 2026 to do some in-person meetups. So you'll probably hear more about that in some future episodes because it's been really nice to, build the community online, but it's even better to talk with people, kind of interact with the community in person. And I think it's easier to just learn from each other and discuss different topics and really kind of open up just different routes to potentially explore in the wealth building world. We all had a meetup back in New York before our Robinhood podcast with Vlad, and we spoke with a couple of people in the community. One of them was a kind of an Airbnb realtor where they had a bunch of units in New York. The other one had a gym overseas. So it's just kind of cool to just you hear from people who are doing different things, but are still kind of on the same journey of using money as a tool, continuing to stack assets to make more options available to them in their life. So we definitely want to bring that into the real world some more. So if you don't have that community yet, well, first off, you got the digital podcast right here. Keep tuning in. But in the future, especially in 2026, we plan to figure out some spots where we can bring the community more in person and have those relationships built in the real world. But Pierce, what about you, my friend? Any closing thoughts before we officially wrap up this episode?
Not many that can trump what they say, but I mean, I'm just super thankful for this opportunity, man. I mean, this was the first year. I mean, I knew what we were doing. We're doing our online. We have an online presence, whatever it is. But the DMs I've got this year, the people that have reached out to me personally, and it's awesome, man. It's in a very blessed position to do this, and I appreciate everybody. You four, you three included. And it's been fantastic, and I can't wait for next year for us to kind of kill it more than we did this year.
That's it, man. 1%, 1% better every episode, I guess is the kind of
Right.
philosophy we're rolling with. Yeah, 2026, a lot of episodes out there. Gotten tons of DMs on the Market Hustle with people who have, shared their own lessons and what they've kind of learned and maybe some of the takeaways they have from the podcast. And it's really nice to see, to get those messages and just to hear from you guys all. So yeah, if you've been listening, make sure to send us a message, give us some thoughts of like what you like about the podcast, maybe what you've learned. Yeah, it's just kind of nice to hear from y'all because, when we're here on the podcast, it's usually just us four, but this is about the community, and the more we can bring that alive, especially with our 2026 plan to bring more in-person meetups, I think the better this community will grow. So I'm excited to take on 2026 as well. But I think that's a wrap. We covered quite a bit in this episode. It was a lot of fun. And of course, we all learned quite a bit. But I encourage you, whoever's listening, to take some time and think through the questions we kind of all answered. Maybe start, get a journal or a notebook and write down what was one of the big financial lessons that you learned in 2025. If you started investing this year, write down how you handled the April 2025 tariff sell-off. Like, did you panic? Did your strategy kind of break? If so, why? Or did you stay the course? Like, did everything kind of flow well? It's good to kind of reflect on these questions. That way, you just kind of see where maybe some of your blind spots are, and it's going to help you build a better attack plan for the next year and build on all the momentum you started or built in 2025. So that's a wrap for episode 64. I hope all of you have a wonderful holiday with your friends and family. I hope you have a wonderful new year, and we're all going to be back in 2026 to kick it off with an episode probably in early January. So keep an eye out for that. That being said, have a great rest of your nights, and bye-bye.